Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Friday. I don't even know what today's date is. Today is Friday. It looks like it's January 7th. How about that? What's more important to know this morning is that we're about to get the non-farm payrolls report coming out here in just about a minute. We're expecting anywhere from 140,000 to 150,000 jobs gains. All right, and we'll get into some of the other stuff in a little bit. But right now we've got a dollar CAD up here. We're looking at the loonie. The unemployment rate came in Canada about a half an hour ago. Looks like the numbers out here, and we've got some dollar strength. Not sure if this means we've got dollar weakness or if this number's good. Okay, number missed. Non-farm payrolls increased 103,000. That's a miss right there. It looks like that means that we're going to see, well, it looks like Euro's moved a little bit higher. Maybe that's some potential weakness, although that's a very long wick candle. As of late, the risk themes have sort of shifted a little bit, where good economic data this year has actually been good for the dollar, whereas in the past it would encourage risk-taking and it would be bad for the dollar. So right now it looks like we're seeing Euro move a little bit higher here versus USD. Let's go back and I just want to look at the loonie here. Okay, so this is also showing dollar weakness as well. So it looks like the paradigm may actually have shifted. I've been discussing this recently, that we used to have risk-taking where, if the economic data was good in the U.S., that would encourage people to go out and seek yield. All right, they put on carry trades, invest in things like the Aussie. We can take a look here at the Aussie real quick. I'm guessing that the Aussie's, yep, Aussie's a little bit higher as well. Wow, Aussie's a lot higher as well, based on this news. So today is a story of when worse than expected numbers are actually worse than expected for the dollar. So that's interesting. That's an interesting shift that we've had there. So that's kind of what we've been looking at so far this morning. I just want to tell you about some of the other news out there. In the today's unemployment Friday in Switzerland, their unemployment rate ticked up to 3.8%. So I think that would be a nice problem to have. In Germany, retail sales figures came in lower than expected. They were expecting a gain of 1%. They actually came in at negative 2.4%. So that could be a sign that maybe some of the internal demand and Germany is decreasing a bit. Their exports fell to 0.5%. They're expecting a 1% gain there as well, and that may be indicative of the rest of the Eurozone, who has been buying German exports for some time. With everybody else taking these austerity measures, markets might be slowing down, and the demand for German goods from those places may be curtailing a bit. Just want to tell you some Eurozone GDP, the third quarter forecast actually came in a little bit less than what they were hoping for, 0.3% versus 0.4%. Just bear in mind that this is only a forecast, and that is not the actual figure that comes in. So it could be a case of trying to manage expectations there. All right, and then we talked about the Canadian employment. Take a look real quick at Canada. Okay, we've got, look at that. We just breached 99 cents. So the dollar is worth a full penny less than the Canadian dollar right now. Okay, they had their change in employment. They had a gain of 22,000 jobs. They were expecting 20,000, but their unemployment rate actually ticked lower. Okay, so it went from 7.7% to 7.6%. Okay, right now, the U.S. unemployment rate, however, okay, it's coming in at 9.4%. Versus the expectation of ticking lower to 9.7%. So we actually shaved 0.4% off of that figure. Now, this is going to be an interesting number to try and figure out. Is this, a result of the seasonal demand of the holidays in December, or is this actually, real full-time employment going forward? Is this a case of, people dropping off of the payrolls number, so to speak, and that they're no longer part of the official employed? It has to do with the participation rate. So I haven't seen those figures yet, so I don't know exactly what that participation rate is yet, but that could be something there. But it looks like unemployment rate, which you're going to certainly hear that trumpeted as the headline number. It's down to 9.4%. They're expecting 9.7%, which as we know is still extraordinarily high. But it's just a question of whether or not it's a case of accounting gimmicks, or if the situation's really starting to improve. So it is possible that we could see a reversal today at some point. I'm just going to come back here, look at the euro. Wow, look at that long tail on that euro pulling back. It is possible that we see a little bit of a reversal here. Just be mindful of the volatility that's going on, and that's what I've got for today. So good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.